Alright gang, it's your boy Nature, aka Nature. Alright, so we're back for another video. So as you just learned, we just learned how to trade the double top and double bottom formation. Okay, so double top, double bottom formation. Right here, double top, double bottom. So we just ran over that. Alright, so opportunities don't happen unless you create them. Alright, so I just wanted to read that quote. Alright, so in the next lesson, we're going to learn how to trade another important chart pattern that you're going to see in the market. Remember, these are chart patterns. These are not single candlestick patterns. These are not double candlestick patterns. And these are not triple candlestick patterns, what we go over already on OnlyFans. These are chart patterns. Alright, so it's the difference. Just wanted to make that, wanted you guys to know that for sure. Alright, so this is chart patterns that we're going over. Alright, so how to trade head and shoulder patterns. So how to trade head and shoulder patterns. So head and shoulder chart patterns is reversal patterns and almost often are seen during an uptrend. Head and shoulder chart patterns and the reversal patterns, just like the top and bottom. So not only is a head and shoulder a trend reversal pattern, is known for its dandruff reversal as well. Funny joke. And this lesson will stick to talking about trend reversals and how and when to leave the dandruff for another time. So head and shoulders. A head and shoulder pattern is a trend reversal formation. Okay, it is formed by a peak, which creates the shoulder. It's going to peak up, create a shoulder, followed by another peak. It's going to peak up again, but that peak is the highest peak. Okay, out of both peaks, the highest peak is the head, obviously. Okay, the highest peak is the head, then you have the shoulders. Okay, so it's going to make the first shoulder, then it's going to make the head, which is the highest peak, and then it's going to make another lower peak, which is going to create the second shoulder, okay, in that reversal formation. Okay, then you have the neckline. You draw the neckline, and connecting the lowest points of the two droughts, you can find how price is going to drop down. So the slope of this line can either be up or down. Typically, when the slope is down, it produces a more reliable signal. So when the slope is down, you see that how the slope is down is more reliable. That price will continue in that direction. A trend reversal pattern is formed at the top of an uptrend. Okay, so this is a head and shoulder formation. You have the shoulder, then you have the head, and then you have the shoulder. The neckline is, if it slopes down, it produces a more reliable signal that price will reverse from this uptrend to a downtrend. So when you see this head and shoulder pattern, it is a reversal pattern that is formed after an uptrend, reversal formation pattern that a downtrend wants to begin. So in this example, we can easily see the head and shoulder pattern. Okay, you can easily see that. All right, the shoulder makes the first peak. The second peak is the highest peak, which is the head, and then it creates the third peak when it goes lower. Okay, which creates that other shoulder. So in the head is the second peak, is the highest peak, the highest point in this pattern. Okay, the two shoulders are formed. They are peaks, but they do not exceed the highest peak, which is the height of the head. With this formation, we put an entry order below the neckline because the reversal pattern of an uptrend, meaning that a downtrend wants to come. So we put our entry trigger below the neckline, and we also calculate a target by measuring the high of the point of the head to the neckline. This distance is approximately how far a price will move after it breaks the neckline. Okay, from the highest peak of the head to the neckline is how we measure how price will continue after it breaks the neckline in a downtrend. Kaboom! Price breaks the drop at the same measurements of the height of the highest peak in the neckline before it broke. you can see that once price goes below the neckline, it makes a move that is at least the size of the distance between the head and the neckline. Okay? So we know you're thinking to yourself, the price keeps moving even after it reaches that target. My response is don't be greedy. Don't be greedy. Take profit, take your money, and close the trade, and see what price is going to do next. Don't be greedy, okay? Do not be greedy. So inverse head and shoulder is just like head and shoulder pattern, but it's formed during a downtrend. And guess what? It's a reversal trend pattern, meaning that price wants to not go down. That's head and shoulders, but inverse head and shoulder is formed during a downtrend, and head and shoulders is formed during an uptrend. Inverse head and shoulder formed during a downtrend is a reversal formation chart pattern that signals that price wants to head back up. So the name speaks for itself. It's basically a head and a shoulder formation, except that it's inverse. Except that this time it's upside down. A valley is formed during a shoulder by even a lower valley head, which is the highest peak, and then another higher value shoulder, which is going to make the other shoulder. So you have the first shoulder, which is low, then you have the head, which is even lower, which is the highest point, the head, and then it creates another shoulder, which going back up, letting you know that price wants to extend back up and that the downtrend is over. These formations occur after extended downtrend momentum. As you can see, extended downtrend momentum, it creates the first shoulder, then it makes the highest peak, which is the head, and then it creates the shoulder going back up. That's the neckline. Okay, the slope should be kind of going up. Okay, when you see that, it means that price wants to go up. As you see a inverse head and shoulder, and the slope is not this straight, but it's going up more, and means price wants to head up. Here you can see that this is just like the head and shoulder pattern, but it is flipped upside down. Okay, you have the shoulders and the head is the highest peak. How do we measure this? With the formation, we place a long entry above the neckline. So a long entry for buys above the neckline. And our target is calculated just like the head and shoulder patterns. Measure the distance between the head and the neckline. So we look at the head, the highest peak, and the neckline, and we can measure that. Then we can measure the momentum of price moving upwards. With this formation, we place our long entry above the neckline. Our target is calculated just like the head and shoulder pattern. We measure the distance between the head and the neckline, and this is approximately the same distance that price will move after it breaks the neckline. As you can see, price moves in the same distance after it breaks the neckline. We notice by looking at the head and the neckline, measuring that to see how price will move after it breaks the neckline. You can see that price moves up nicely after it broke the neckline. If your target is hit, then be happy with your profit. Don't be greedy. However, there are trade management techniques where you can lock in some profit and still keep your trade open in case price wants to continue and move in your way. As far as like day trading, you can trade for a day or 2 days. So you will learn about those later on in courses, of course, and different chart patterns we'll learn about. And different, we'll learn more and more about that later. So that wraps it up for this important chart pattern. Head and shoulder head and shoulder and inverse head and shoulders are reversal chart patterns, just like double top and double bottom. Head and shoulder is reversal chart pattern. Is found after extended uptrend. Is a reversal pattern for a downtrend. Head and shoulders, and then inverted head and shoulders, which is the opposite, is found during a downtrend, an extended downtrend, and is a reversal pattern for an uptrend. So, alright gang, I hope this helped. It's your boy Nature, aka Nature. In our next video, we'll learn how to trade wedges chart patterns, which is also important chart patterns too. So, alright gang, it's your boy Nature, aka Nature. Gang.